Hello, and welcome to the FieldLink Podcast, presented by Helena. I'm your host, Bill Smith. We have a great episode lined up for you with exclusive market insight from our special guest. On today's episode, I'll be talking with Jody Lawrence from the Strategic Trading Advisors in Nashville, Tennessee. We'll discuss 3 key profit pointers for the 22 growing season. In addition, we're going to deep dive into the economics behind what is driving the soybean crush sites that are being built across the United States, and we'll better understand how that may impact soybean producers in the future. As a side note, this podcast was recorded prior to the Russian invasion of Ukraine. Well, hello, everyone, and welcome to the FieldLink Podcast series. Really excited to have you all here joining us today. You know, as the weather's starting to change across much of the United States, some growers down in the South are really sharpening up those planters, and while many other growers across the Midwest are really doing that last-minute decision-making as it relates to what am I going to plant and how many acres am I going to plant this year. And to help us navigate some of these, production decisions, understanding a little bit more about the markets and what's going to happen is Jody Lawrence from the Strategic Trading Advisors out of Nashville, Tennessee. Jody, welcome to FieldLink.
Thank you, Bill. Good to be on the inaugural podcast for the markets.
Well, we're really excited to have you here today, Jody. You're certainly no stranger to a lot of the Helena customers across the United States. Before we start diving into the top 3 profit pointers for 2022, why don't we take just a moment a little bit and tell us a little bit about Jody Lawrence and your business?
Okay. Well, I've been in the business since 1990. Came out of it with an accounting background. My mom was a farm girl from Ohio, and even though I grew up in Memphis, never worked on the farm when I was growing up, but always went and saw my grandparents, my aunts and uncles, and was always amazed with the farm, just like any kid would be. The animals and the openness and just what, especially growing up, even in a southern city. Not like I grew up in Manhattan, but when you look at the just all the stuff that goes on the farm and the big machinery, and obviously was close and loved all my family, and just found that the farming culture and the people in it, and my grandparents and aunts and uncles' friends were just salt of the earth people. So I was always drawn to it. And then once I figured out that accounting and being decent with numbers was a good way for me to make my ends meet. Once I got into the career, started helping my brother-in-law to balance his books and help him with his on-farm information and following the markets. And because just like most farmers that I've always dealt with, they're great farmers, all really smart people, and certainly it's not the markets are above anybody's level of intellect, but it is, and it's there's a lot of study to it, and there's a lot of experience that goes into it. It can be incredibly intimidating, and when you get intimidated, you usually stop doing what you're doing if it's on the marketing thing, and that has become where I've tried to step in to for Helena and for all the other customers to make sure that we've got solid information that's easy to understand, to make a decision without having to worry that, is the sky going to fall? Is it going to go through the roof? What's going to happen? Just trying to take a lot of the mystery and some of the anxiety out of making those decisions. And with that background, came out of the brokerage industry when I worked for J.C. Bradford in Nashville. When we had the opportunity to move to Nashville in 1996, that began writing the newsletter that most everybody sees and has attached me to through Helena. Started writing that, hard to believe, 26 years ago, I guess now. And it's grown, and through internet and smartphones, been very fortunate with my relationship with Helena that we have over 6,000 Helena customers, wholesale, retail Helena team members on the newsletter that we send out every day. The markets are open, and certainly lately we haven't struggled for content to write. So it's been a great way to stay involved in the ag business, and something that I have really enjoyed.
Well, it certainly has been quite a journey. Jody, you and I have been working together for a little over 15 years, and that daily newsletter certainly keeps me in tune with what's going on in the marketplace. So we certainly appreciate that, and you're certainly helping a lot of growers out across the nation. You know, as we take a look at the 22 crop, there certainly is a lot of content, a lot of things happening. You mentioned that in your opening there, and just coming off, I had the opportunity to go to the Top Producer Summit in Nashville here recently with some of the nation's top producers around the country. And boy, Jody, a lot of chatter about the markets, obviously, things along supply chain, that's on top of everybody's mind, along with politics. Gosh, a lot of things are certainly happening across the nation. What are some of the top things that you're hearing out there as you're looking at the market as we take a broad scope at 22?
Well, 22 has just set up as one of the most interesting years we'll ever have, because you really have this kind of counterintuitive paradox of where we are with price coming out of the 2021 crop. Because how often do you get to say that, yes, you just produced the largest bean crop ever and the second largest corn crop, just under the record, and yet we are still sitting at the highest prices in 11 years, 10, 11 years. And when you look at level of profitability, 2021 was probably on the margin the most profitable year on farm for almost every producer who was doing a good job and got yields. So that is really the biggest question. People are scratching their heads that we produced the second largest corn crop ever, and yet the U.S. balance sheet decreased by 100 million bushels. So what does that mean going into 2022? To me, it means that last year you pitched a complete game, one hitter, but now the market is demanding that you pitch one of those or a perfect game every time out now, because the world demand coming out of COVID has continues to expand as the world population expands. That you're just in a dynamic that we have not seen, and I can't remember seeing anything like this in the 32 years I've been in the business.
Yeah, it's kind of crazy, just as we take a look at our production yields last year, things were really good across the country. I mean, certainly there were some spots where things weren't, didn't have record yields, but by and large, we had really good yields across the country. We had an amazing fall, quite frankly, to get fertilizer down. We're really set up pretty good from a production standpoint as we look at 22 in a lot of regards. But there are certainly some challenges. We certainly heard a lot of chatter. You can't turn on any of the media and hear the word supply chain challenges, and there's certainly plenty of them out there. But what are some of your customers telling you about as it relates to supply chain challenges that they're faced with looking into 22?
Well, going to the retail wholesale side, the people trying to get it and get it on farm for all the farmers, the biggest challenge is just simply product availability. And you go back through everything, some of it, a good chunk of it probably comes down to COVID, because when you started having no one wanting to show up to work in some of the major production areas for the nitrogen products, urea, potash, you go through the list, that the supply started to dwindle in the available marketplace. And then because of all the shipping logistics that those barges are full of Amazon packages coming from all over the world to my doorstep and your doorstep, that the freight rates have gone up so incredibly that the lack of product, we've run into the perfect storm of incredibly high costs on all of the input side. And oddly, seed, from everybody I've spoken to, is actually going to go down a little this year, which at December corn, I'm looking at it right now, is just testing $6 again today. I can't remember a time when we had high priced cash corn and seed went down. But that's just kind of the interesting situation that we're in. But farmers are certainly concerned that even with $6 December futures, that when you escalate the cost of your inputs by 30, 40, 50%, next thing you know, you're going to be on a good, productive, irrigated acre. We did some math for my friends in eastern Nebraska that they're going to be all in at $1,100 an acre, and that just really is an eye opener about that the cover charge to farm this year has just gone through the roof, and you have to take some fairly dramatic steps, whether it's through your revenue-based insurance, whether it is being very meticulous about getting your product and getting it on and being an even better steward of the land this year, because the margins, when you start talking about risking that type of money to put in a crop and right now the margins certainly are still good. You can, most farmers we've talked to are somewhere between making net $100 to $150 an acre on corn, but they're used to getting a 30, 40% return when prices and yield are good, not a 10% return. And certainly that will play in the banking industry for people trying to secure lines of credit as we move forward. And then you just go with straight product availability that is that shuttle of nitrogen or ply liquid going to be there on time when you need it after you've planted. And through no fault of anybody that I know in the industry, it's a world problem that everybody's dealing with.
Yeah, it certainly is some global challenges on supplies. And I think you're right. It's really going to be very important for growers to, have a plan A and a plan B, and gosh, maybe even this year a plan C on hey, what about this? There's a lot of things that are simply out of our retail chain's control. But the important thing is to have a good relationship with your sales rep to ensure that you're in the loop, you're getting the best information you can on time, and be prepared to pivot if needed. Jody, you mentioned some of the corn opportunities there, but boy, a lot of chatter recently around soybeans. As we step back and take a look at some of the soybean productions, there's a lot of noise made around soybean fuels options there with the announcements of a lot of airlines, United Airlines and others wanting to jump in this game from an environmental impact standpoint. Some of the interesting facts that were shared here recently, lots of production dollars going to be going into new crush plants across the entire United States. Right now, some of the statistics are showing with the current plants that are either in construction or being planned that will hit the market by 2025, we could look at an additional 400 million bushels of domestic soybean demand. That's a big number. And those plants that are being placed, they're from north to south, Jody. We're looking at plants up in Spiritwood, North Dakota, Crookston, Minnesota, Castleton, North Dakota, Sergeant Bluff, Iowa, Norfolk, Nebraska, David City, Nebraska, Montgomery, Kansas, Alta, Iowa, Cedar Rapids, Iowa, Cairo, Illinois, Somerset, Kentucky, and Desham, Louisiana. So this is not just a Midwest play. It's playing up and down the river in the Midwest and the Deep South as well. Couple that a little bit with some of the challenges that we're seeing in South America right now, some of the production there. This soybean thing's got some serious energy behind it. What's your take from a financial perspective as we look at 22?
Well, the bean market is really the driver in this, because to the numbers that you just gave, I think the easiest way to break those down to give everybody a real clear comparison, you were talking about 400 million extra bushels of bean demand that will be coming online here in the not too distant future if it isn't online already. Think about that. That's an extra 8 million acres at 50 bushels an acre. Okay, so let's just take, there's 8 million more acres of beans that we're going to need. Now you couple that with the South, with Brazil in particular, but also Argentina, Paraguay, and Uruguay. They've lost nearly 1 billion bushels of beans, and just to take it down to what we were told in the last reports, take it down to 650 million bushels. But you're looking at just that. The U.S. would have to plant an additional 13 million acres simply to make up for what has been lost in South America to this point. So if you add those two together, the next thing you know, the world may be asking the United States and Brazil in a combination, because we're really the largest producers, even though Brazil is about 50% ahead of us right now. But by the time you total all that up, the U.S. and Brazil have to figure out a way to plant nearly 20 million more acres of beans, or get that production from either increased fertilization rates and higher yields, or rally prices to a point where we start to ration the supply that right now is getting dangerously tight when you look at everything that beans are used for, because by the time you take the bean and you crush it, you've got bean meal, and you have red hot livestock markets right now in between cattle and hogs at contract highs. Certainly when people are trying through this inflation play, have tried to mind their budgets a little bit better. The chicken has always been a more cost-friendly way to feed your family, but the chicken industry is also growing. And when you look at just the demand for the feed side of it there, then you take the bean oil on just the things that we talked about. You end up with the dynamic that the bean market, there's a lot of chatter, and I'm not one to just jump out on the end of a limb to try to cause myself trouble, but a lot of the really smart people that I trust in the industry are giving it better than a 50-50 shot that we take out the 2008 or the 2012 highs, and with the potential that we could be in this position with beans for years and years to come if all of that demand comes online for bean oil.
Yeah, that you kind of scratch your head. It's exciting on one hand, but you have to ask yourself, where are these acres going to come from? As that demand continues to climb, and with all of these crush plants coming on, that means we're going to have a lot of byproducts, obviously, and obviously some pretty good opportunities for some feeders, from a livestock standpoint. But boy, that's a lot of soybeans. Looking forward. Any idea where some of those acres might come from? Who could win and lose out of this potential growth?
Well, let's go back to the easiest thing to talk about there on beans is the much lower cost, input cost of production. And when you, in general, we can work with, and in a lot of places, this is on the high end of $500 an acre to put in beans that have potential of 55 plus yield, and beans certainly through, all of the genetics and the technology and the products that are available, through HPG, for example, Hellman Products Group, to what is available now. You've got a lot of people growing. They roll out of bed and they're disappointed if their bean yield's under 70. So you get to a spot where a $500 input cost to grow 55, 60 bushel beans looks much more palatable on a risk reward basis than it does for corn. So you have to think that corn, even though December corn at $6 is certainly trying to buy acres, you've got to think 2 or 3 million acres easily come uh, out of corn into beans. But as you look through the rest of the world and the rest of the prices, you've got December cotton at the highest level that it's been in not a little bit less than a decade. But you've got December cotton trading at $1.10, and you've got old crop above $1.20. That the Cotton Council came out earlier this week and said they expect cotton to pick up 800,000 to 1 million acres, simply because that has become extremely profitable for all the cotton growers. And you're talking about a wide area that now, with the better improved genetics and heat tolerance for corn all through the Delta, Texas to South Carolina, basically, that you are in a major battle in between cotton, bean, and corn trying to do it. And you're not even talking about some of the less talked about crops, which are rice, which is at a really in good shape on price. And you look at some of the smaller ones, because Canada got smoked by the drought this year. Oats are coming back into play in a lot of the more northern plain states. So there just isn't enough acreage that in the United States, now that South America's getting towards the tail end of their growing season, out other than the safrinha crop. The U.S. can't just snap a finger and add 10 to 12 million acres to spread out to help solve these problems. The U.S. agriculture, between corn and beans, and we'll throw in cotton, is pretty tight above how much you can expand above 195, 196 million acres. And you can't just wholesale go, well, let's go up to 210 million this year to solve this problem. The guys at CRP, anybody at the USDA or in Washington, we don't have that power and that flexibility for expansion that Brazil and some of the South American countries do.
Yeah, definitely. And, when you go out there, that's why I think a lot of growers are scratching their heads a little bit right now, because everything looks pretty good. Things look good. I think talking to several growers last week from Louisiana and as well as Arkansas, they're like, we're probably going to be making some decisions. We're going to have a base, kind of decided here pretty quickly. But, boy, there might be some game day decisions based on what acres go which way, whether it's corn, soybeans, or even cotton. But I think, talking to several growers throughout the Midwest, they're pretty well set. If you're a corn guy, you really don't want to change that rotation too bad. But, boy, at some of these prices and some of these production input challenges, there might be some of those acres transitioning. So,
well, you look at it on the beans. I've gotten multiple calls over the last 2 weeks because the ADMs of the world are getting very aggressive. $14 new crop beans this point of the season. When you start talking about, let's go to the 60 bushel yield, that's $840 gross. And even if they throw the kitchen sink at it and put in $600, they can today on beans guarantee themselves $150 to $250 an acre profit. And they, like you said, they may love and have a lifelong love affair with planting corn. But when your wife says you're planting beans because we're making $250 an acre, that's what they're going to be a lot of acres. And I think you've got potentially 3 to 5 million acres that are going to be, like you said, that game time decision, because the game time decision may simply come down to, do they have enough end product anywhere on the corn acre that's going to be there? Because I'm not going to put in $1,100 input cost and just put basic fertilizing rates down on it, because I'm swinging for the fences. If I'm going to spend this money, I'm going to keep spending it to make sure I get my yield. Because if you spend $1,000 an acre and do a poor job just simply because of availability on getting it fertilized, then you're creating your own problem that a lot of farmers I know want to stay away from.
Yeah, that's a really great point. I think farmers are in it to win it this year, with these kind of prices, and you really need to approach the marketplace like that. And, talking to some growers, specifically around soybeans, yeah, they love planting corn. But, the soybean, the process is much different than it was before. The technology's advanced, different headers on combines, and look at all the research and development dollars that are going. You referenced earlier at the Helena Products Group some of the products that they're bringing forward to really boost these yields and enhance the opportunity to, maybe move that average from 65 to 75 bushels, whatever it may be. There's a lot of opportunities to really expand that yield potential in soybeans that have kind of been ignored, for the last 30, 40 years, unlike corn.
Yeah, it's there are going to be some difficult decisions to be made, and product availability, at the top of the list. I think that everybody coming off last year is got enough cash and understands where the profit margins are that they don't have a problem putting in that money. But if they have to make a decision on on those flexible acres, I've got to think beans. And we know the wheat acres have already increased in the Dakotas and in the northern and southern plains. So that battle's already lost, because that's unless they spray incredibly high-priced Roundup on everything that when it comes out of dormancy to plant corn or beans, that you're really in an issue that there's a finite amount of acres between corn and beans, probably 180 to 185, that logistically, and everybody I've talked to, whether it's the big companies like Potash or BASF or CF or certainly at Helena, that logistically you can't do more than 93 million acres of corn, just because because the compression of when everybody wants to get it in the ground.
Lots of crazy things happening in that particular space. And, there's a lot of crazy things going around the globe right now, Jody. I mean, you can't turn on the TV or listen to the radio. The global compound of, turmoil. Hot topic today right now is the Ukraine. What's going to happen in the Ukraine between them and Russia? And I know a lot of folks have been hearing this, and there's been rumors about they're going to invade and this sort of thing. And there's a lot of chatter back and forth on that. But I think for most growers, it's really important to step back and say, well, what's so important about Ukraine? And I pulled some stats together, and this, quite honestly, Jody, this blew me away when I started really diving into this. But as far as agriculture is concerned, the Ukraine is number one in Europe in terms of arable land area, meaning they got the most arable ground in the entire continent of Europe. They placed third in areas of black soil in the world. They have 25% of the world's volume of what we'd call black arable soil. They placed number one in the world for sunflower and sunflower oil. And this was the one that really caught me, Jody. They're number three. They're the third largest producer and the fourth largest producer in the world of corn. That caught me off guard a little bit. What are the markets looking at when they're hearing all this Ukraine chatter? I mean, it's got to be changing day to day, but what's your take?
Well, the whole thing, and this comes down to we are getting, and I'm not going to make any comments about this administration against previous administration or anything else, because this is not a political debate, but we are getting our tensions with both China, our major buyer, and Russia, a major support or a major grower in the world, and their actions in the Ukraine are creating a tension in the markets that, on top of all the other problems, the South American drought, the logistics issue with all the fertilizer, you get to a point where if Russia invades the Ukraine, it's not necessarily just the issue of, because I get this, I've had this conversation with many farmers, and I completely understand the question. They go, well, why would the southern shipping, where there are no real issues, that Russia doesn't appear to be wanting to roll in on the Black Sea? Russia's Navy is positioned in the Black Sea that they could very much curtail shipping. And then let's think about you as a major world shipping organization. Why in the world would you send ships into harm's way simply to go get some corn from the Ukraine or some wheat from the Ukraine that you can source from other places? You're talking about billions of dollars worth of risk that they simply don't want. So you don't have to blow up the port or have an invasion that just shuts down. The shipping will naturally shut itself down because the risk of going in and out of that port are going to be substantial. And and the shipping industry right now, their profit margins are so huge, it's just not going to be something they want to deal with. And if that happens, and you have, just for a couple of weeks worth of shutdown where we've got to source corn and wheat bushels from other places, the U.S. is it right now because Argentina's early corn crop is going to be coming out soon, but it's going to be coming out of that 1.5 billion bushel U.S. carryover while Russia and the Ukraine go through their conflict. So there's an amazing domino effect that if Russia invades the Ukraine, that we become the world source for corn, and Australia and other places in South America will fill in on the wheat side, but they're going to be coming to us for corn, and that's why you see March old crop corn right now making or threatening new contract highs nearly every day. You've got it, back up to 656 today, and it's entirely about this conflict and South American weather, and can't do anything about South American weather. Mother Nature's going to win that battle. But if all the end users, in China being the biggest one, are already in the process of switching cargoes that they have purchased from Brazil or Argentina to the U.S. to make sure that they don't have a disruption of food supplies that comes over. So it's an enormous issue that seems like to a lot of people, well, what difference does it make? 50 years ago, the Ukraine was part of Russia. Why is, it's just, it's got a ripple effect in the world grain markets that, back to beans, when we were talking earlier that all-time highs, you certainly could bring that into play with a lengthy disruption out of the Ukraine shipping for corn back to the $7-8 range, and at $6.50, it's not hard to envision that. And although wheat's record high was $13, give or take, about I think it's 2008, you're still in a position that wheat could go substantially higher. So wow. It needs to be solved if you want less volatility and some sort of stability in the pricing, because if not, the entire year of 2022, we could have the type of volatility that we've seen over the last 3 months.
And thinking about volatility, great points on the global scale, geopolitics and so forth. But hey, talk to me about inflation. This is crazy. Some of the reports coming out. Everybody's impacted, not just growers, but consumers across. If you're in New York City, if you're in Kansas City, it doesn't matter. You're buying a gallon of gas, you're impacted by inflation. What's your outlook as we take a look at inflation for 22?
Well, you hit the gallon of gas thing, and you got crude trading over $90 a barrel today, and the energy side of it, and this goes straight back to Russia. Russia is an enormous producer of oil and natural gas and the major supplier to all of Europe. And certainly Putin is controlling his own price at this point, that he goes, hey, I'm making more money every time crude rallies $1.50 because they're worried about me shutting down the pipeline or something happening that disrupts the flow into Europe. And I've seen, and back to the inflation thing, just trying to keep everybody's food on the table and lights on during COVID with all the stimulus money that was printed across the world. You have an enormous amount of extra money that if you look at anything, just and calling real estate a raw material because it's a thing, it's not a stock, a house or land is a thing. That money is chasing returns. Investment dollars are chasing these returns that are making a finite amount of product be, whether it's corn, whether it's nitrogen, whether it's cars because of the chip shortage, whether it's all farmers have seen the price of land skyrocket as the investment firms have come in. And if the price of land goes up and productivity on that ground goes up, your rent's going up. So the inflation part of this is it's just going to be difficult to extricate the agriculture side from, because even if we are fortunate enough to produce, there are no additional weather problems in South America, and the U.S. plants fence row to fence row and gets big yields, you're still in a position that with the inflation, the amount of money chasing all of these assets and returns, because stock market is well off the highs, and that money is going to be chasing something, and that's the core. That's the core definition of inflation. And we are, I just don't see how I don't see how it ends quietly.
Yeah, something certainly we need to keep an eye on. So, Jody, as growers look at 2022, share with us 3 key points that you believe that producers really need to consider as they're getting ready to crank up their planters and put some diesel in the air for this the spring planting season.
Well, we'll start out with, if you can write a check today, excuse me, and make sure that you're going to have all the input product that is necessary to plant, fertilize, and raise your crop the way you want it, then you have to put your arms around it right now, because the supply chain issues, if you are waiting for a crack in the nitrogen markets or in the urea markets or something like that, you may find yourself without a chair to sit down on when it comes time to plant. So get your product, get your rotation, know exactly what you're doing. Your best hedge against a potential squeeze as we get later in the season, or closer to planting season, is that we hold on to your old crop corn and your old crop beans if you have any left, because they're the perfect hedge against a smaller U.S. crop this year. Your old crop is going to go up much faster than new crop and work as a great inflation hedge against the rising input prices. So product availability you have to deal with first and foremost. The second thing, and I'm preaching this, although we're at very profitable margins right now, a lot of farmers look at where prices are and go, gosh, $14 beans and $5.80 new crop corn, I'm making a killing. Until you know that you have all your product, that $5.80 and that $14 are potentially very, very misleading, because you've got to know that they're up here for a reason. Yes, we've got some world supply issues, but they're also up here to motivate you to make sure you plant every acre. And the only way you want to plant those acres is to have all those costs underneath it. Because like we said, the acre of corn costing $1,100 when last year it was probably, the average was somewhere in the $850 range. And you were making money at $4 corn then, but or making money at $5 corn. You're not making as much money at $5.80, $6 corn as you were. So that's a big it's a big issue to keep in mind, that You've just got to deal with the inflation and know where these costs are. Now, directly with that, beans, because they're lower input costs and high profitability, as soon as you have all of your bean supplies available, begin to hedge some beans. Because if we get a 3 million acre shift and you plant 92 million acres of corn, 92 million acres of beans and 90 million acres of corn, the price of beans will plateau at least and potentially go down. So once you get your arms around your product, once you're comfortable, you have enough to get through the season, begin to make those hedges, and you can easily control the upside in a couple different ways through some low price call options, which all I call is price insurance from a different carrier, that you don't want to be in a position, because we've been through this before. People thought the rallies in 2012 would never end, and they came to an abrupt and angry end in 2013, that you don't want to be growing $1,100 an acre corn, and then the next thing you know, you end up selling $5 corn when you had plenty of opportunity at $5.75 above, because this could be, the margins are going to be so tight and there's going to be so much on the table. If you plant $6 corn and end up selling it for $5, you will get yourself in a pickle very quickly. So sell as you get product so that you know where your crop's going to be, because there are plenty of easy, affordable ways to protect your upside. Like I said earlier, if beans do go to $20 and corn does go to $8, so just so many things there. And back to diesel, if this keeps happening, any breaks that you get when your supplier calls and goes, "Hey, I can give you on farm," look at the price of diesel. Don't look at the futures price. Don't look at the price when you drive by the gas station, and talk to your supplier, because that from here, diesel could go significantly higher. It could go 40, 50 cents higher very easily with an extended Russian-Ukraine issue. And the downside from here is fairly limited. I would rather buy it and have it go down 15 cents than not buying it and it go up 40.
Well, that's certainly some great advice. And, those are three key things that I think growers really need to consider, as they look into the 22 planting season. A lot of volatility, but, as you mentioned, a lot of opportunity out there too, to really capture some of this upswing.
Talking about upside and protecting it, and this is something that the market really didn't allow you to do in 2012, the last time that we had multiple years of higher prices. You've got December 23 corn at $5.60 futures right now, November 23 beans at $13.08. Any other year, those are great prices. Mm-hmm. And that's where some real opportunity may be, because the scars should be fresh enough for what's happened over the last 10 years that you can't go, gosh, what happens if input costs, double again in some situations? You've got to take the long play here and look at the fact that you can get on the board for your 23 crop. And with the very high likelihood there'll be some moderation or a drop in the input cost, you can secure some really, really good starting points for your 23 crop right now. And even if your elevator won't take it, there are plenty of ways to do it on the board with the help of your bank and a credit line that your bank should easily understand why it's a great idea.
Yeah, and I think you bring up a great point. Ultimately, it's about having a strong relationship with your suppliers. Hopefully your Helena representative, but also your banker, as well as folks like yourselves, your trading advisors. Surrounding yourself around a good team between 22 and 23 are going to be really, really important as we take a look at these upswing in markets. Well, Jody, I want to thank you for joining us today on the FieldLink podcast series, our inaugural launch here at FieldLink. folks, if you're going to be attending the Commodity Classic in New Orleans this year, be sure to swing by the Helena booth, and Jody's going to be there. He'll have a session with us during that show. Stop in, meet Jody live in person. He'll share some more additional insight with you. And Jody, we want to thank you for joining us today. Again, Jody Lawrence, Strategic Trading Advisors. Jody, if folks want to learn more about your organization or get the daily newsletter, where can they go to reach you?
Well, for the newsletter, the easiest thing to do is to talk to your Helena representative, because they'll be able to get that to me immediately. And then in the newsletter, all of our contact information is there. So the easiest way is to reach out to Helena. We'll get you added to the list, and you'll start receiving the newsletter. And the best thing about the newsletter for all the Helena customers, it's free to you. It's thank you for your past business and this year's business and next year's business, because we know where this is, where the markets are, and just the anxiety associated with them, that the best way to deal with any situation is education. And that's really what 90% of that newsletter is about.
Thank you, Jody, for joining us today, and to you, our listeners, for tuning in. We'll be back in 2 weeks to bring you more expert ag knowledge in our next episode. Make sure you follow the FieldLink Podcast on your favorite podcast platform, and follow Helena on social media so you'll never miss an episode, as we will link you to the industry's top experts.